And then for sometimes where you are actually uncertain about the trade, understand you don't have to take the trade at all. You can actually scratch it. Like, honestly, this would have been your best entry. This would have been your greatest entry. This middle stuff, consolidation part, it's not the best of entries, but it is showing some exhaustion around here still. It's optional for you, but what you could also do is actually check the correlating pair just to kind of get an idea. Like with USD JPY here. What do I see? Basically, it's rejected multiple times. It is on a slight downtrend, but at the same time, what I see here on the smaller time frames is actually an inverted head and shoulders. I would much rather take that. And seeing that as a buy, that would mean gold would be going the opposite way if it does go up. That doesn't mean it's guaranteed to break. It still has to break if it's going to do that. So, we'll see. We can get, that would have been your perfect entry at this moment. By the looks of that candlestick pattern right there. And like I said, you can take like multiple entries. Shoot, if you went with, honestly, if you got in with, actually I'm not going to get into that, but yeah, just throw in your entries, put down a stop loss around 15 pips or whatever you want to do depending on your confidence level on the trade. This is a really good trade to take. And you can then put one right there if you want to, and then just wait for the break. If that's what you want to do, if that's your strategy, and how you play it. But the point is, you want to get used to the strategy. You want to get consistent. It's fine to get consistent on demo, but once you get live, you want to build your confidence, which is why I recommend starting with like 1 cent. I would say you can put in $50, $100 accounts a month, 50 to 100 a month. If you don't blow any of it for that month, hey, you're doing well. You don't have to add any more money. You can. It's fine to start low. The point is to grow, get consistent at this point, not to put in hundreds of thousands of dollars and try to get rich right on the spot, because if you're brand new, that's just not going to happen. You have to build the consistency first. You have to perfect the strategy. And then after perfecting the strategy, then you're able to get to the higher lots. So that's where basically where counting the pips is, understanding the daily range benefits you. So you grow your account, get it to about 1,000. I would say double it up, keep doubling it up, and then you can keep going higher and higher with each lie as you keep going from there. Or eventually at some point you can add more money if you want to, but you would be less worried if you just grew it from a smaller account and then just blew up from there, or just understood candlestick patterns, reversal patterns, and everything else, and how to basically see the structure. In this case, if it did break up though, it would probably do something like that. Retest, like the picture I showed you before. Understand that there is a bigger structure too. Actually, you can't even see it that well on here. You would actually see it better on TradingView, to be honest. But yeah, there's a downward structure with that. But it could do something more along the lines like that. Like, I've marked it up multiple times before, as you could tell, but the thing is, it just didn't break as it came back down. But as long as you know how to look for the peaks, peak reversal, look, the candlestick pattern is basically reversal, the same reversal stick patterns that you see in the pictures that I've showed you before. The signs are there. You just have to know what to look for. But yeah, and then we'll go back to gold. So basically, what could happen? So we had the triple bottom here already. We got to this point. If it does drop, multiple scenarios could happen. It came down. So one thing could happen. It can reject again once more. Potentially. Understand it's still in the middle of the range. So it can either go here and then make a bigger M, or it can continue down. Let's see if we have like some sort of, we can use trend line structures. You basically want to wait for the break of the trend line. So if it doesn't break, basically it's just making a bigger W. It's going to be a higher leg than the last one. So, which is basically confirming it's going in an uptrend for a little bit longer. And then it probably won't break most likely won't even break the previous high, which is where the ADR is perfect. It's under the previous high of the day. High of the day was like right up here, like right there. It's the high of the day, previous high of the day. And the day before that was, yeah, it's lower than for 2 days at least. It can go here, drop down. Yes, it can bounce up one more time if it wanted to, but ultimately, it could do something like that. There's 2 scenarios. Just remember that. I could change the colors too, just to kind of make it easier for you guys to see. Well, I probably shouldn't do that yet, just for the fact that, well, no, that's about fine. It's more of an upwards trend. But that seems about right, because it's just been more of a weird range for a while now. But basically, just understand that you want to look at everything, see what's going on, look for a pattern, look for structure, focus on basically the zone that you're at. Look for previous high of the day, low of the day, look at your daily range, look for candlestick patterns, reversal. Like I said, I really only trade London and New York session. I don't trade Asian session like that. And so typically I stick with gold, USD JPY, AUD JPY, Euro USD, Euro JPY sometimes. I'm starting to do more oil. I don't do too many pairs because you don't want to overcomplicate it and just put too many pairs out there for yourself. But you can do that. It's just easier for me to just manage like a certain set. That way you don't have too many to look at all at once unless you want to set alerts. That would make it a lot easier. But yeah, basically all I'm saying is just, at this point, you just want to understand the structure of the market. That's all it is. Don't overcomplicate it. Don't rush yourself trying to get rich. Because rushing the money isn't going to help you get any more successful if you don't know how to see this damn thing. And you got to understand that there can be multiple scenarios, and you have to be open-minded enough to see what's going on. And patient enough to say yes or no to a trade, or wait for the perfect opportunity. So like I said, my perfect opportunity in this one, here. Honestly, best not to even really fool with that one. You could have held right here, and right there would have been a way better opportunity, because it peaked. Yes, there is a previous high, but it's not even near it. It's in the middle of everything. I mean, why did I say previous high, previous low? So now you kind of just gotta have a better idea of as far as the way it happened. That I think using structure, you understand basically better you should understand how to trade a bit better at this point, and how to basically protect your assets. As all it is at this point is just protecting your assets and then just taking the best opportunities possible. But if you have any more questions, feel free to comment on the video or message me directly. I think I made like 3 videos, but okay. Have a good one. Oh, and I forgot, I also wanted to talk about AUD/JPY. So, in this case of AUD/JPY, it actually fell out of the structure. It was in here for a long time. But basically, the way that I've been looking at it, came down, up, and basically there is potential of actually based off of the candle right now, bouncing right off of here and going down more. So M pattern. Actually, that was called beautifully. I haven't even looked at the M part. But basically, in the part as far as the buy, I bought it in New York session, so it was strongly, had some strong support in this area. M formation. But what made me enter on it, I honestly caught it a bit late, but there was that. Put a 25 on it, rode it upwards, and then again it dropped down hard around this area. I took it as a correction for like an awkward head and shoulder. I believe that's how I took it. But basically overall, added some grid change to my account on that one. But it was a short-term trade because of that part of the structure. So, yes, at times it can come back in the structure, but you want to sometimes look at it as correction. And like that line wants to show you right there, drop. Because the market will try to correct itself and then just fall right back in there. And at this point, it's showing a little bit of a rounded structure too. And basically 2 different tops. It didn't exceed that one at all. And it's just been exhausted quite a few times. So, you could get a pretty decent sell. Even better if it breaks. Basically, even right there, it's telling you that it wants to bounce off of, it could potentially bounce or break the trend line. Right there. If it does break.